Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and it's time for ETF Classroom. Let's know how you can have a passive strategy via ETFs. For this, with me, I have Suresh Sadagopan, founder, Ladder7 Financial Advisories. Suresh, good evening and welcome to the show. So, a very important discussion for all those investors who are interested in putting money or having ETF as a part of their investment portfolio. What exactly is an ETF?
ETF is actually a collection of securities that often track an underlying asset or typically tracks an index. And typically ETF is a passive investment product, unlike the typical active investment product, which mutual funds typically tend to be. This is like a mutual fund. This is also a pooled investment option, pooled investment instrument. It offers excellent diversification because the underlying index maybe let us say Nifty 50 or Sensex or any other index. So there is an excellent diversification and it will track the same diversification as the underlying index. The difference as far as the ETF is concerned as opposed to a typical mutual fund is that it is traded on the exchange throughout the day, and your NAV is going to be different throughout the day as opposed to a mutual fund where you will get the NAV at the end of the day. So since it is going to be traded on the exchange, you will also need to have a trading account and a demat account. Again, the point of difference in the case of an ETF as compared to a mutual fund is that in the case of a mutual fund, the counterparty is the mutual fund house itself. Whereas in the case of an ETF, it is like it is like just like a trading in a share, where there will be another person who will be buying the unit from you. And the highlight, if I want to say, as far as as far as the ETFs are concerned, is that it comes at a very, very low cost because mostly it is passive investment option, and there is no need for an underlying fund manager to be there who typically makes active choices. So it's a very low cost option. It is getting very popular across the world. It is very popular. In India also slowly the popularity is increasing now.
So, Suresh, the question over here is when you're talking about passive strategy, how different are ETFs from an index fund or ETFs versus index? If I have to choose, what kind of an investor should be choosing ETFs?
So ETF is actually a very good, passive investment option. Like I said before, normally it tracks an underlying index. So it's a very good option for somebody to choose, especially if they are going to invest from the long-term point of view. So because the cost structure is in favor of ETFs. So a typical ETF may have a cost structure of less than 10 basis. So if somebody is going to hold for, let us say, 8, 10, 15 years, which typically is a good time frame for, let us say, holding a Nifty 500 or a Nifty 100 or those kind of ETFs. So if they want to hold for a slightly longer period of time, the cost is also a consideration. From that point of view, an ETF will be a very good choice. It's a low cost investment option, passive investment option.
All right. So, in what way are ETF products available? In what form are ETF products available?
See, once upon a time, it used to be confined to Nifty 50, Sensex, and things like that. But now, if you actually look at the kind of ETFs available, it's available across the board. Whether it is on mid cap 150, small cap 250, whether it is on gold fund, whether it is on bank index. So it is available across the board. So now, in fact, the number of index funds which are available, which are much lower as compared to ETFs. So ETFs are actually proliferating, and with say a depth in ETF, this will become a very good product for investors to consider because virtually all manner of indices are represented here, including the smart beta indices like Nifty 100, low volatility. Those kind of things are also there in the case of ETFs. Sometimes these are not present as an index fund.
All right. So now, let's understand the kind of strategy one can have and place ETFs in their portfolio. Also, one important thing, we talk about asset allocation, Suresh, whenever we talk about financial planning and having a financial portfolio. So, apart from equity, in what other asset classes can we have ETFs?
No, it can be virtually in any and every asset class. We have gold ETFs, we have silver ETFs, we have ETFs on debt-oriented products. So equity ETFs are always there. So whatever categories mutual funds are already present, which is in all these categories, ETFs are also present. So ETFs are slightly differentiated as compared to mutual fund. So from the point of view of a financial advisor like us, we don't really differentiate between a mutual fund and an ETF. So from our point of view, both are collective investment product, pooled investment products. So which according to the investor requirement, we'll be choosing either an ETF or a mutual fund. The advantage in the case of a mutual fund is the counterparty is the fund house, so liquidity is guaranteed. In the case of ETFs, as of now, the liquidity is not guaranteed across all kinds of ETFs. So that is an evolving story, and I think over a period of time, ETFs will be very liquid, like we see currently in the US. So any ETF, even if you want to buy 2 billion worth of, let us say, 2 billion US dollar worth of units, you can easily buy. Currently, there is a bit of a challenge as far as liquidity is concerned, but I think that will get sorted. And from our point of view, ETF is a fantastic product to invest our clients' money.
Talking about risk specifically, what kind of risk you actually land up mitigating if investing through an ETF?
See, I mean, as far as ETF is concerned, I told you there is no fund manager. Typically, most of the underlying ETFs are passive ETFs. Nowadays, even active ETFs have started coming in. But let us not really talk about that because those products are still not available in the country as of now. So one of the most important risks that we are taking out in the case of an ETF is the fund manager risk, because this is a passive investment product. And typically it will track an underlying index. Let us say NIFTY 100 or a Sensex or NIFTY 500. It will track the underlying index. So the fund manager risk is definitely taken out of the equation as far as an ETF is concerned. And I have told you about the low cost attraction, because the fund manager is not there. It also comes at a low cost. So that is the attraction, and the risk which is going out is the fund manager risk essentially.
All right, let's understand the strategy of having ETFs placed in your portfolio. Now, in what form and for what category or for what market cap exposure should one have an ETF in their portfolio?
So that depends on the kind of family that we are planning for. So suppose, and it is basically based on the asset allocation. Suppose we have a client for whom we have determined that the asset allocation should be 60% equity, maybe 30% debt, 5% gold, and 5% something else. So then within equity, what kind of asset allocation we want to have among the various categories is something that we need to decide. And let us say among the 60%, I assume in that particular family, 20% goes to large cap. Now it is a call that we as an advisor need to take, whether we need to take an index fund or an actively managed fund, or we need to take an ETF. So that's a call based on whether we want to really hold it for the long term and whether the customer has a demat account, trading account, and whether they are comfortable holding in the form of an ETF. Because the liquidity can be an issue. Like I said before, liquidity in the case of an ETF can be an issue, at least in some categories. It is thinly traded in some of the ETFs, so that needs to be borne in mind. So, and based on that, I mean, we really don't differentiate between an ETF and a index fund. Only consideration being the cost. So we will put together a portfolio based on what is required for a particular client at a particular point, and we may move in and out of ETFs and index funds as may be required based on the liquidity situation.
All right, I think that will be all. Thank you so much, Suresh, for being on the show today and helping our viewers with everything about ETFs.
Thank you very much.
Let's take a quick break, and post that I'll be joined by Aditya Shah, who will be answering your mutual fund portfolio queries. But then before I slip into a break, I'm going to leave you with our WhatsApp number and our email ID, where we keep waiting for your mutual fund portfolio queries. In fact, be it mutual funds, insurance, credit card, loans, tax, anything related to your investment strategy, your loan repayment strategy, or your insurance portfolio or your insurance policies, you can send your queries on 8657974571. Also, what you can do is email us your questions. You can email us your questions on themoneyShow@etnow.tv. Your financial planning with Aditya Shah after this break.